Hello doctor, my name is Madan Raj and my matric number is 264172. Today we'll be discussing on the lesson on the relevant theory or framework. In this case of JETBLUE and the new revenue recognition standard, there are two theories will be discussed, which are rational choice theory and the second one is adjusted market assessment approach. The first theory is rational choice theory. This theory states that individuals use their self-interest to make choices that will provide them with the greatest benefits. For example, if we have given three choices to be chosen, we will definitely choose the best option that will serve our personal interest after looking pros and cons of each option. Next, this theory highlighted on utility maximization. People will seek the most justification from their preferences. To support this theory, there are two questions arose: whether JETBLUE need to use US GAAP at their revenue recognition, or whether JETBLUE need to consider to implement the new revenue recognition standard. To make my justification stronger, I have one small issue to be discussed. Will the new revenue standard provide more decision useful information than the prior US GAAP? So we will make two comparisons between two revenue recognition standards. So for the US GAAP, the old GAAP standard had more complex, detailed and separate revenue recognition requirements for specific transactions and industries. As a result, different industries use different accounting for economically similar transactions. On the other hand, new revenue standard improve comparability of revenue recognition practices across entities and provide more useful information through improved disclosure requirement. The 5-step process has really simplified the revenue recognition standard and has increased the estimation of certain revenues such that it gives the accurate information to the decision makers and the investors. After discussing about the rational choice theory, let's move to another approach. Now we will discuss about the adjusted market assessment approach. The definition of the adjusted market assessment approach is that it involves the entity evaluating the market in which it sells goods or services and estimating the price that a customer in that market would be willing to pay for those goods or services. To support my evidence, I would like to take one example: loyalty programs. Loyalty program is one of the JETBLUE good or services that has been recorded as a revenue. When prior US GAAP, JETBLUE accounted for loyalty programs using the incremental cost method, whereby it did not consider the issuance of loyalty points to be a component of revenue. Personally, if they use adjusted market assessment approach, JETBLUE could value mileage credits based on their redemption value relative to outright cash payments. For example, for tickets that can be purchased with either credits or cash, JETBLUE could calculate the implied conversion rate to get a value for each mileage credit. After further discussion, we can sum up that either rational choice theory or adjusted market assessment approach, both theory or approaches give a positive impact on the new revenue recognition standard. So I think that the new revenue recognition standard will be the best option for the JETBLUE to recognize their revenue recognition standard for their goods or services.